Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. We've got a lot on tap for today. We've got a huge Philadelphia Fed manufacturing index number. It really blew me away. I was very surprised at what we saw, the highest since January. That's big. We've got stocks pushing all-time highs. We've got the S&P 500 way up. We've got the Russell 2000 potentially posting a big-time record gain. We might talk a little Russell 2000. I really don't talk about it much because I feel like it's a more risky stock index, and there's a lot of volatility there, and I don't know that the Russell's the way we should go, but definitely pushing all-time highs. As far as why, we're entering a new era of Fed policy, and it looks like it's going to be quantitative easing. The markets are going up, up, up. As far as we had some trades yesterday, and I have to tell you that for a Fed day, we traded it live and we had three winners. It was really fantastic. The Euro USD trade that we posted yesterday came in as well. We had a Fibonacci level stand up in the dollar CAD before it gave way. I've got another big level in the dollar CAD we need to look at. We've also got a 920 crossover on the Bitcoin that we do have to follow. So there's a lot going on today. We got a pullback idea in gold if we are fortunate. And I hate to say, lucky, because I don't really believe in luck too much. Luck usually, the harder you work, the luckier you get. But we have a level in gold that if we get it, we've got a real good shot. So I'm going to go ahead and go over that as well. But there's a lot going on today. Key news events. We've got all sorts of different things happening across all the markets. Remember, if you have any questions at all, be sure to ask them either in the YouTube live chat, or if you have live chat access here in the How to Trade trading room, you can ask there as well. If you don't want to ask your questions in public, send me a private message over at How to Trade. I will answer your question on the live stream. Remember, this is all about engagement. It's about learning. It's supposed to be what I would call an interactive trading experience. And I know I talk fast, so if you miss something or need clarification on something, just ask and I'll go back and cover it. So we got a lot to cover today, though. Definitely a big day to trade. Lewis Shepard, good to see you, Lewis. Let's see, Tina Jane, good to see you. Tina, welcome. Lita, always a pleasure, Lita. Let me see, Andrea Garwal. All right, good to see you, Andrea. Euro USD from the 117.94 level. Perfect trade. It was pretty good. We're going to start probably recapping that one. That was a dandy. Tuku, always a pleasure, guys. Okay, like I said, any questions at all, be sure to ask, and I'll do my best to provide a timely answer. And if I don't know, I'll just say, I don't know. We'll have to go looking for an answer. All right, remember, if you want to capitalize on any of these ideas or just get started in the market, check out Switch Markets. We've got a lot coming out. I'm not sure. The webinar was supposed to drop today, but I think it's going to drop tomorrow. And that's that AI webinar where it's going to show you, really give you a good breakdown of how to use Algo Builder, what AI can do for your trading. And you're going to have an opportunity potentially to check that out relatively soon. As soon as I know, you will know. I'll post it and be sure that I throw the link out there so you guys get an opportunity to see it. We see Tina. I've entered two long trades at 36.35 and 36.34. Was hovering around 36.40 for ages. So I'm guessing. Let's see. What are you trading? 36.40. You're trading gold, huh? Gold's fantastic. We got a big pullback area in gold. It's fun to trade when the markets are active. Yesterday during the FOMC Live, I want to thank everybody that joined us. It was sort of a real short notice impromptu stream just because of my travel schedule, but we saw some really great trades that went down. We're even going to recap that dollar-yen 5-minute crossover. That actually went up and got its points at a 1-2 risk versus reward. So good to see you. Let me see Jonah. Good to see you, Jonah. Welcome. All right, guys. If you want to trade, Switch is the place. Bring your ambition into focus with Switch Markets. Low spreads, zero commission accounts. You got all sorts of options there. Just go ahead and head on over to Switch and see if you're in a municipality that is serviced by the brokerage. And if not, and you need an FX broker or a futures broker, go ahead and let me know. Send me a private message, and I'll sort of try to point you in the right direction. If there is a right direction, I think there is. I can just tell you who I do business with and who I'm comfortable with, but definitely Switch Markets. Learn a lot about the service suite heading your way with Switch. So check them out if you get an opportunity. All right, trade update. Fed cuts rates. Pullback in view for the Euro USD. Fantastic trade. This is one of those that we put out sort of as well after the Fed spoke yesterday. And what we have here is just a fantastic zone, 117.87. Now, this spike low right down here, remember that spike is going to be a 3-candle formation. So there's going to be candle 1, candle 2, candle 3. And then you're going to get the big rally there. This isn't really a full-blown spike yet. It will be on next week's open, but that's an upper extreme. So a lot of times when I want to be aggressive, I will look towards that upper extreme as to be maybe the top of my Fibonacci retracement sequence. It's all about finding a range that works. And what I mean is you've got to have a nice range. There has to be enough distance from your bottom to your top to make these retracement levels make us believe that they're going to be valid or viable trade locations. And right there, you're right around 117.87. 94 was our entry. And let's go ahead and take it down to maybe a 4-hour chart. Should show us exactly what we need to see. And there it is. So what happened right here? Here was our big spike. Okay, we put in our Fibonacci's, and then we came right down, and there we were elected. So what happened there? Well, your low was down to right around 117.80, and then you got a beautiful bounce back up to 118.48. That was a real nice pick for about 35 pips. It wasn't. Remember, with these Fibonacci retracements, we don't always try to follow the market and try to get on the 1-3s, 1-4s, 1-5s. I think that if you wanted to be a trend trader or a momentum trader, or maybe, I won't say breakout because crossovers aren't really great for breakouts, but if you want to just take a trend in a position, looking for those big 1-2, 1-3, 1-4 payoffs, risk versus rewards, then you're probably better off looking at a crossover strategy. Now, this is interesting to me because we're pretty consistent getting what I call bumps off of those levels. So if we have a support zone, we know we're going to get a test and then a bump and then a rally. Okay, we got that. That's really all I was looking for there. I wasn't saying, okay, this is the bottom of the market. Now we're going to trade way up to our 120 threshold, which I still say is going to probably be tested here at some point with the dollar showing a bit of strength today. Still very weak. Still very, very weak. And when we start talking about rate cuts as well, you're going to see a situation where the dollar is going to fade. And I don't believe there's anything that can be done at this juncture. You're going to see a lot of rate cuts, and they're coming our way in the next 6 months or 9 months. I mean, the rates are going to be Down around 2% would be my guess. That's the attitude and sort of the tone we got yesterday out of a Jerome Powell that looks to me like he's heading down the road. That looked to me like a gentleman that was filling out his resume. I mean, that was brutal. The press absolutely savaged Powell. I'll talk more about that in a little bit, but it was, if you want to check it out, it's on the FOMC Live, and it's on all our YouTube channels, cataloged and in the How to Trade trading room. But this right here is interesting because we sort of had that big sell-off earlier in today's session that was on the back of your Philadelphia Fed survey. That turned out to be a big-time market driver because it was such a huge topside beat. But now you almost have that hammer formation. I talk a lot about hammers. I should just do a video on hammers, but that really is a hammer. What you have is you have sort of a tight body, nice sell-off, and then a rebound, and that sort of suggests that the market's going to reverse. Interesting because the market structure isn't trending. Very, very flat, nice downside support here in the Euro USD. Do we move higher from here? I would say that if I wanted to take a position, long or short, Shane, long or short, I would say, yeah, we're going to go ahead and just buy this thing. Listen, this isn't a trade that I suggest you put down by any stretch of the imagination. I need to adjust my units, though, at least make this interesting. This isn't a trade that I'm recommending right now or trying to say, okay, you got to do it. What I would recommend is understanding the market dynamics and how it works. Big time sell-off, big time support level, nice sell-off there, and now you've got a hammer. Now you sort of have an opportunity maybe to buy and play in what we call an accumulation trade, which means if you have good trade location, okay, good trade location, we're just sort of betting that we're going to see an accumulation of bids from this general zone. I would venture to say that, yeah, you probably are. I think that you're probably going to move higher from here. Why? Because the dollar is a train wreck right now. And even if you get a little bounce like we did today, up about 0.35% on the dollar index, I see those gains as being easily erased. We're going into a rate cut cycle, and all of a sudden, Bank of England didn't cut interest rates. We're going to talk about the Great Britain pound here in just a second. So we're going to go ahead and put a position long on there and see what develops during this live stream. I would be really surprised if we trade down. I think the worst of this might be over today, but we're going to wait and see. Remember, anything you do in the market, stop losses are important, proper leverage, 1 to 3% of your account on any given trade. If you want to bet 5% of your account, I'll let it go. I'll let you do it. But remember, you start going 5, 7, 9, 10% of your account on any one trade. You don't have to lose very many in a row before you're in big, big trouble. But I did want to highlight that this was an absolute fantastic level. Is it as good as it was? No. It's saturated. This level's been traded, but still we have to respect the broader market structure, and we also have to really respect the state of the Euro USD. I mean, bullish? Yeah, probably. A lot of room up in this tail to do business. We could easily trade higher, much higher from here. We just got to wait and see what develops. But I was very happy with that trade idea. I really liked it. So that was our first trade update. I wanted to cover that. Remember, Tuesday, Wednesday, Thursday, it's pedal to the metal. It's all systems go. We want to trade, and then trade some more. That's absolutely imperative. What's our goal? We want to be in the market when it's time to trade. That means we want big liquidity, we want good market depth, and we want volatility. We want the markets to be moving when we trade them. That gives us a chance to set our stops and capitalize from advantageous, beneficial moves in pricing. That's it. What's our goal? To make money. This is when we want to make money right now. We want to make our weekly P&L. We want to trade our plan aggressively. We want to feel good about what we're doing. We don't want to be scared in the market, fierce for the other guy. Let somebody else be worried. We're not worried. We got a good approach. We feel good. As long as the market's cooperative, we got an opportunity to succeed. All right, we got another trade update that I do want to outline here on gold, and this is the one that we just put out a little bit earlier today. Let me see. No worries, Tina. It was the last one was a typo. No worries. I got way behind on the live chat again. How about Ichimoku? Anyone use that? John McClain, Ichimoku. I am not a veteran of the Ichimoku. I did some work on it. I wrote some pieces, and I think I maybe made a video a long time ago on it. But to be honest with you, I wouldn't feel comfortable bringing the Ichimoku clouds into the live streams and trade them. But I know that they were extremely popular at one point. Good. Listen, we don't care how you trade. I don't care if you're using crossovers, moving averages, Fibonacci's. A lot of people have asked me to do the time price offering, the market profile stuff, and I'm more than happy to do that. But it doesn't matter how you trade. What matters is that you're consistent and you manage your risk. That's absolutely, absolutely huge. Let me see, Tina. It went lower last night after the Fed speech. Yeah, the Fed really messed things up because of Jay Powell's tone. really brought about a lot of uncertainty into the market, because I wasn't the only one that thought he looked like his dog died. I mean, it was that was all over social media. That was all over saying, was this Jay Powell's last Fed meeting? I think that it could have been. I mean, I don't know, but I think that job offer, maybe his next step in life. I think that if they make that job offer in the next couple of weeks, Jay is going to say, I'm moving on to pursue other interests, because he looked like a person that did not want to be in that room. And I don't blame him. It was pretty ugly. That was as combative of a press corps as I've ever seen. I mean, they got after him in a big, big way. Let me see. Nat Niles. Hello, Shane. I'm working on building a brief checklist about my system. Can you please share your checklist, things you go through before getting into a trade? That would be a great help. Thanks. Great question, Nat Niles. Let's go through it right now. Let me see. Okay, so a checklist. Let's say we're going to have a basic sort of primer. What qualifies a trade to be a trade? Okay, the first thing that I'm going to look for is my strategy is going to be a big part of my checklist, and that's going to govern when I'm getting into the market, when I'm getting out of the market. Okay, that's going to be probably somewhere in the middle of your checklist. Now, at the very beginning, the first thing I ask myself before I sit down to trade, number one, am I prepared? Am I ready to go? Physically, how do I feel? Psychologically, how do I feel? Am I tired or am I sick? If you don't feel well, maybe you were just up last night popping champagne all night. If you don't feel well, you should never trade. Dave, F19, good to see you, Dave. It's great to be back. First thing on your checklist, how do I feel? Physically, okay, I feel pretty good physically. Mentally, how do I feel? Yeah, my mind's clear, I'm ready. Check number two, am I prepared to trade? Have I done my homework? Have I looked at my market state? Have I looked at my economic calendar to make sure I know where the key events are? Have I outlined the key levels that I need to be looking at? Do I know exactly how I'm going to react if the market does this, or this? Now, we don't know what the market's going to do, but if we're ready to go when the market does something, we're light years ahead of the game. That would be checklist part number two. So right now, I'm starting out physically, mentally. Am I ready to go? Do I feel good? Okay, I feel good. Let's do it. Number two, have I done my homework? Am I prepared? Have I looked at my key events? Have I looked at my key levels? Is the table set for me to view the market in what I would call a successful way, which would be an unbiased manner? Meaning I'm not going to project my own feelings onto the market. I'm just going to show up and be ready to go. I've got my levels. I have a pretty good idea what the market's doing. Are we trending? Are we flat? Is there any economic data coming our way that I need to be aware of? What does the volatility look like? Okay, that would be number two. Number three would be my strategy. I would say, okay, I'm going to get in when XYZ happens. I'm going to get out when XYZ happens. I'm going to assign XYZ to the trade. Risk management, entry, exit, and risk management. That's all sort of the guts of that checklist. And then the last thing I would say on that checklist is okay, now that I've traded my day, how do I feel? It's all about how you feel, your psychology, things like, did I execute my plan? So my checklist when I'm trading, it's all about how do I feel? Am I ready to go? My basic trade execution parameters. Did I execute my trade? And then what did I learn? Maybe even how do I feel now that I've traded a whole day? Am I tired? Am I ecstatic? Am I happy? Am I sad? That all goes into your checklist. So it's that's the way that I see it. But let's say that you were just going to have a basic trade oriented checklist, then it would be as simple as, okay, this is when I'm going to enter, this is when I'm going to exit, this is my risk assigned, what happened? That would be easy. But I think the checklist needs to involve your psychology and your mind state and your physicality. Very important. Jonah, good to see you, Jonah. Welcome. All right, guys, let's go ahead and go with our trade idea. We're going to get on gold right here. Trade update, pullback bid on the table for the XAU USD. It's everybody's favorite. It's gold. Well, let's go ahead and take a look. We have that upper extreme that we just worked with on the Euro USD, and you can see it was right up there for gold, right around 37.0765. So we're working right from this swing low down here, 33.11, right up here to this high. It's not quite a spike high or a swing high just yet. It's just our weekly upper extreme. And right here, going into Friday's session, I think we have a pretty good chance that the top's already in for this week. I left 38% down there, 35.56, and I believe we shaded that up to about 35.59-ish, somewhere in that area. We'd be looking to take probably $6 or $7 off that trade, but really just a beautiful pullback zone. I think that if we get a chance to cash in on that, that's what I would call an extremely high probability trade. That's very high, and the reason why is we are bullish. I mean, we really are bullish towards gold. There's no reason not to be bullish. What could really change gold's mind and send us south, definitively south? What could do it? Not much. The answer is not much. You're in a situation where we know we're going to get the rate cuts now. All right, we sort of know that there's still a lot of geopolitical uncertainty on the table. There's really no peace in the Russia-Ukraine situation. We've got the United States is also all of a sudden running airstrikes on drug boats out of Venezuela. That's brand new. Nobody knows what to do with that other than just sort of leave it alone. We've got the civil unrest here in the United States that's brewing. I talked about that yesterday. I'm not going to talk about that again today, but the temperature here in the U.S. is as hot as I've ever seen it in my life. I'm 46 years old. I don't ever remember seeing this kind of division in the country, and the division is really spilling over into violence. Don't kid yourself. That's definitely baked into the cake here with the gold market. Why? Because if things start to break down in the U.S., the idea is that maybe those markets aren't as secure. Maybe you do something with the gold. Maybe you do something with a safe haven. Something to think about there. So I'm bullish gold the entire way. The next key level up for debate is 37.50, and then after that it's going to be 4,000. I stick to my guns. I mean, I'm making a lot of market calls these days with gold, but man, we've been pretty accurate. That's a long-term sort of ascending wedge, or that pennant that we showed you on the monthly for like 3 or 4 months. But when that thing broke, it really broke. So I'm buying pullbacks the entire way until we see a major sell-off, something big, something down to like 32.50 or 3,000. I'm inclined to like the top side of this market all the way up to 4,000. Then we'll start talking about maybe the tops in at least for a year or so. But for me, I still think we have a pretty good void here, a pullback right down there from right around 35.56. I believe we shaded that up to 30.59. It's in that trade idea that we posted in the How to Trade trading room a bit earlier today. Essentially, we're just looking for ways to get long gold. We're not trying to reinvent the wheel. We don't want to try to be, I always say, why try so hard? Just go the path of least resistance. Find something that works and go with it. Pullbacks in gold have been pretty doggone good. So I'm definitely looking at that for sure. Let me see. Nat Niles, great. Let me see, Tina, could you share? Yeah, I just shared my checklist. No worries. It's not really something I have written down. I just have it in my head. But we're actually building a trading journal, and that checklist may be something else that we could feature. Trader's checklist. That's a good idea. Maybe we could build a PDF or something and put that out. Let me go ahead and write that down. Trader's checklist, so I don't forget. It's a good idea, though. It's always great to stay organized as possible. Once the first starts flying in the markets and they start moving, we really have to know what we need to know before we need to know it. And if we don't, we're in big trouble. We're already behind. Let me see. Great answer. Very helpful. I will implement this into my checklist. Absolutely, Nat. You're welcome. Same as the UK. There you go. I believe we'll hit 4,000 by Christmas. Yeah, I think so too. All right, guys, we did have some news events, though, and I do want to look at the Great Britain pound. One more trade update that I would like to hit on. Actually, 2 more real quick, and then we'll go we'll take a look at the Great Britain pound and what the BOE said and some of the things coming out of the U.S. today. This was our U.S. dollar Japanese yen long trade on the 5-minute chart yesterday during the Fed madness. You could see this box. This was our 920 crossover. The 9 crossed over the 20, and we were taking that bid. Why? Because you were in oversold territory right down there. So theoretically, that could have been your stop loss. I played this one much, much tighter. I put my stop loss right beneath our signal bar. And the reason why I did that is because I wanted to make this a true scalp, and I felt like that stop loss was way too low. We would have had to take a position, which would have worked anyways. But this right here, very tight. We almost got stopped out, but we saw really just an epic rally up to that 1 to 2 risk versus reward, which was right up in here somewhere. I don't remember the exact out, but it was about a 400 payoff, I think. So we risked 200 to make 400. A good trade. But you can see we just sort of trended higher. And then once we got into the Tokyo Open right around here, then we just moved definitively higher. So the 920 was pretty good. Right now, what do you have? Well, you sort of have the opposite, don't you? You had a nice big peak right there. We were in overbought territory, which means we would have been looking to take a sell on the 5-minute chart, which would have been somewhere, I believe, right in here. We got the crossover. It was one of those dojis. Now, one of the things that I would really stress that is this the same trade? A 5-minute 920 crossover on the yen. Is this the same trade as we saw yesterday? No. Why? Look at the price bars. They're huge. You start to get into these smaller price bars. Take a look at this. This is tight. The moving averages, see the shaded area between the moving averages? That's one hint that maybe that's not going to be the greatest trade in the world. Look how tight it is. And you're crossing over and you're crossing under and you're crossing over. You don't want to be involved in that. I highly recommend backing off to a larger time frame, specifically a 4-hour chart on a Forex pair. So what do you have now? So there is your bid. There's your bid. 920 crosses over. That would be your bid. Your stop loss would be right down here beneath this spike low. On a 4-hour chart, you don't really need RSI confirmation, in my opinion. But if I was going to build this trade, is it good to go right now? Do we have to go right now? Do we have to buy right now? It's right around our entry. I mean, we could buy. We already had a pretty nice run up and then a pullback. Well, we also made a video on using Fibonacci's to improve your entry point. So something like this: spike low, spike high. Maybe you wait for price to pull back down to 147.20 and take the long from there. It's not a bad idea. The only question is do you get it? We're up at 147.86. Is there really anything coming our way? Yeah. Bank of Japan interest rate decision. That's coming up during the U.S. overnight. What happens with that? That's a fantastic question, and it's something that we got to be ready for. If you're going to be trading the yen in the next 12 hours, 36 hours, 24 hours, 5 hours, be aware that the BOJ is going to get involved. And when they do, anything can happen with this pair. I would be very careful. If you were in on that trade yesterday and you already cashed out, great. Would we be looking to take this long? That's tough. That's tough, especially going into the BOJ later on. We'll take a look at maybe some of the projections. I'll run a quick Google search and see what people are expecting to happen. But for me, I know the Bank of Japan pretty well. I think most people do. They want to get back down to that negative deposit rate as fast as they can. I would expect a dovish BOJ. So if that was the case, would I want to be long or short? I probably would want to be long this pair. The only question is what happens to the short-term price action after the BOJ speaks. Very, very difficult to say. Let me see. John McClain, what's the lowest time frame you would trade? I've traded, using these crossover strategies, you can go really low, and we've done it live. You can go down to the 1-minute chart. We've even traded 15-second charts. I don't recommend that just because it's too damn hard. It's too hard to be as precise as you need to be. You need to be absolutely perfect when you're trading a 15-second chart. Your entries have to be flawless. Your exits have to be flawless. You have to be fast, and that's really hard for a lot of retail traders. Maybe if you're an institution or maybe if you had an automated strategy, you could go down that low. For me, I understand that if I'm taking trades on real small time frames, I'm going to make a ton of trades. And if I make a ton of trades, you know what's going to happen? I'm going to win a lot of them and I'm going to lose a lot of them. So what really is going to be your driver of profitability? It's going to be slippage. Slippage will kill you. If you're making 50 trades a day, slippage will kill you. So you've got to be very careful with your slippage. But if you can be precise, you can trade any time frame. For me, I like trading my macro levels. Like this next trade I'll show you here, John. This was a dollar CAD trade that we highlighted yesterday. 38% right there, 137.88. Now you can see the trade trended higher. But my point is this. I would love to execute a trade at that level. If I'm out of it in a few minutes, that's great. I look at my anchor points, my long-term anchor points, the dailies, the weeklies, the monthlies, long-term moving averages, things like that, and build intraday trades based on those. But when I'm managing those trades, typically when I'm trading gold futures or E-mini S&P 500 futures using my long Mac, I'm looking at like a 1-minute chart. I'm not using the technicals on a 1-minute chart because I really don't care what they say. I want my macro technicals. I take my 1-minute chart, maybe my 30-second chart, and I manage my trades accordingly. That way I can look at my liabilities and make sure that I don't lose a fortune on one trade. That's really what this is all about. So to answer your question, let's say this was our trade. We talked about it yesterday, 137.88 going into that Fed release. Let's just go ahead and take this down to a 5-minute chart and see exactly what happened to our level. Where did we hit it at? Right here. That's good stuff. This is right around the Fed. We were actually on air here, and then boom, right up there. What do you got there? 137.87. What's your level? 137.88. That's a beautiful thing. You hit right there, and then you came off immediately down to 137.56. So to answer your question, that's about a 15-minute trade. So can you make that trade on a 5-minute chart? No, because the technical isn't there. But once I know the technical's there on my daily, and I know where I got to hit it and where I've got to be involved at, then yeah, I don't care what time frame it on. We manage our trades using small time frames. 1 minute, 5 minutes, sure. If we want to do something like the 920 crossover with the EMAs and then the RSI confirmation, I have no problem putting that on a 5-minute chart, even a 1 minute, but we've got to be doing it when the market is active. If we don't do it when the market's active, I can almost guarantee you're going to lose. That's just the way it is. Personally, I love trading the 30-minute time frame on U.S. indices and WTI crude oil and gold. 30-minute for me is my bread and butter. It's something I really like. All right, everybody, let's talk a little bit about the events overnight and during the U.S. session that brought us a little bit of pleasure, I guess. I don't know. I wasn't really too thrilled with what the Bank of England did, but interesting, really an interesting vote just the same. Incredible volatility. I'll show you our macros there. We'll dig up our macro charts in just a second for the pound sterling. But big picture, that was the big one. Was Philly Fed was big too today, but it was the BOE that really stole the show. BOE vote. What did you have? You had 7-2. 2 folks wanted to cut. 7 wanted to hold firm. So at a vote of 7-2, they decided they were going to hold everything unchanged, and that's a lot different than the last time out when you had a split decision in that boardroom. 4% right there for the BOE. 4% is about where the USD is right now. Interesting stuff. So let's get out to price action here. Great Britain pound US dollar weekly chart. I really like this because it gives us an opportunity to see really the broad market dynamic. And what I mean is we just really aren't moving. You could say that, yeah, your bullish trend is still intact, and it is. I mean, this rally started back right at the beginning of the year. So there you go. Okay, that's great. And then what do you have really since the highs of June into June? So your high right there was 137.88. Your low right there in July is about 131.41. So we've really traded in a phone booth for quite some time. I mean, realistically, 2 months now? Just sideways, boom, boom, boom. So what could we say about price action? We're not trending. We could say maybe a broader bullish bias is warranted, but we're not trending. Could we find a trade in this? I would say yes. Do I like the Fibonacci's here? Not really, not as much as I would. But when they converge with another one of my indicators, I love them. So if I was going to do something like this, there's your spike low, there's your upper extreme. It's not quite a spike just yet, and you're pulling back, but look at what we have right there. Definitely a zone that you've got to consider. 134.80 right there, 62% is 134.80, and you've got a 13-week EMA down at 134.73. That zone right in there, that's hot. I mean, that is a hot zone. I'd be watching that one closely, especially if we get a bit of a sell-off there. That probably, unless it goes tonight, and it may, it's only about 79 points off or so. That's probably going to be a trade idea for next week as well. You'll notice, you guys noticing a trend? Buying pullbacks, betting against the dollar. That's basic idea. So we do get that pullback down to that key technical right around 34.80, 134.80. That's a beautiful thing. Let's take a look at one other thing though that I want to see here. Let's go put the Great Britain pound USD on a 4-hour chart with our 920 EMA crossover. It's telling us to short it. So do we short it? I wouldn't have a problem shorting it with that formation. Just go ahead and sell market. Let's go ahead and put a little bit out there. Okay, let's sell it. All right, so now if you took that sell, what did we just do? Number one, we shorted the market. Okay, that's relatively simple, but there's your sell signal. 4-hour chart, I'm not worried about this down here, this RSI. I'm not worried about it. 4-hour chart, you play the short side of the market. Where should my stop loss be? Very conservative, right above that spike high. Do you have to sell it right now? Well, traditionally, your sell would be right there on that bar close, which we basically got. If you wanted to wait, though, you could do a couple of things. You go Fibonacci retracement right there to right there. Be looking for a pullback up into here maybe. I don't hate that trade. Probably be looking to the short side though. So on the short time frames, you could definitely be looking to maybe grab a little bit of a, I don't know, it's not a position trade, but 135.60-ish and 136.66. So you'd be looking for a test of that key level down there that I showed you on the macro zone down there, the back end of the golden zone with my moving average. That's probably, I mean, that's the trade that I personally would hold out for. But if you wanted to trade intraday and take a position with a 4-hour chart, you could probably do it with that one right there. Just beware that typically when you see these moves, and it really wasn't even a big move after the BOE took center stage, but when you see these types of moves, usually you get a retracement and then the market decides from there. But if you wanted to trade a breakout type of a situation here, you certainly could. I wouldn't have a problem with that. Let me see, John McClain, do you use ADX or something similar? You know, I don't use the average directional index. I don't do it. I've sort of shied off of it. I've researched it in the past, and I think we made a few videos on it. It can be a great way to trade. You just got to have a full understanding of it and understand its strengths and its weaknesses and also how to manage your risk while using it. For me, I lean towards the RSI to use confirmation, to qualify signals and give us confirmation just because it's so easy. I mean, it really is easy. Above 70, you're looking to sell. Below 30, you're looking to buy. And you don't even have to worry about crossovers or any of it. The RSI, as far as I'm concerned, can really keep you out of flat, dead markets. This market right here, it's not flat and it's not dead. We'll see what happens, though. It looks like it's retracing back up into the guts of this trading range. And if it does, so be it. It's almost to be expected after the BOE, but still, that's an interesting signal. And I'll tell you what, the 4-hour chart on this 920 crossover, a lot of good signals. So we'll see what happens there as we move forward in time. Okay, we had a few other key. I don't know how key they are, but the one that jumped off the chart to me was the Philly Fed. I'll talk about that in a second. Initial jobless claims. There's more and more emphasis on jobless claims. No question about it. Because why? The last NFP report was an absolute train wreck and a disaster show. We're going to see right now the markets are trying to understand what's happening in the labor market. They don't really know. We don't trust the numbers or the stats anymore. We don't really know what we think's going to happen, meaning nobody really has a great predisposition on, okay, we're going to see all this job growth and everything. Nobody's talking job growth right now. It's not we saw Jay Powell yesterday say, yeah, the jobs are terrible. We thought they were good, but they're terrible. So we are very much in a state of flux. That's going to make things like weekly jobless numbers that really weren't important, they're going to be more important. Now, this one right here came to 231,000. This is initial jobless claims. These are new folks hitting the unemployment rolls. That's how we're trying to gauge the relative strength of the U.S. labor market, meaning if you see a huge one of these numbers, then you're going to have to go, oh, well, unemployment's probably going to spike. But if you see one of these that's really low, you're going to say, okay, well, maybe the job situation isn't that bad. 231,000, that's 231,000 new jobless claims. That's that many more folks heading to the unemployment line, and that's beneath 241 expected and down from 264 previous. I'm not going to worry about the 4-week average. There's all different ways to interpret that. You don't have to worry about that. Philadelphia Fed Manufacturing Index, 23.2, over 1.7 expected and up from negative 0.3 previous. That's huge. I mean, that is absolutely huge. What the Philadelphia Fed Manufacturing Index is it sort of gives a good look at that tri-state area up around Philadelphia, New York, New Jersey. That area up in there sort of talks about the manufacturing sector up in that region, which a huge population density, and typically that means that it could be really a premier, not necessarily a driver of economic growth, but sort of an indicator, a leading indicator maybe. That's huge. 23.2 over 1.7 expected. That is a big time figure. And the reason why I would price that accordingly, and one of the reasons why the markets are pricing it, is because it's such a huge miss to the upside. It means that, oh man, maybe things are a lot better than we thought. Right from the horse's mouth, the Federal Reserve Bank of Philadelphia. Philadelphia Fed Manufacturing Index climbed to 23.2% in September 2025, its highest reading since January, from negative 0.3 in August. The latest figures, well above the expected 2.3, pointed to a resurgence in manufacturing activity in the Philadelphia region. That's it. It was better than expected. That suggests that maybe the economic downturn isn't as bad as is previously thought. Jury's still out on that. But here's your Philadelphia Fed, and this is how bad it really has been for a while now. This is what is this, our 3-year chart, I believe, and you can see what we've got going here. It's just negative, 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 and then you got one sole positive, and then you started making a comeback there, being positive, and then you had the big positive growth to open the year. Then sort of that tariffs hit home, a lot of fear, a lot of angst, and now you're just sort of back on the good foot. So interesting stuff right there out of the Philadelphia Fed. I see that as a bullish market driver. It used to be a huge number, an economic predictor of drive incredible volatilities. It doesn't really that much anymore, but it's fascinating. It's fascinating to me. That was a big number. And anytime we measure something and the real number outperforms the expectations as much as it did, we're talking about expecting 1.7 and getting a print of 23. I mean, it's unreal. It's like, why are we even putting out projections if we're going to miss that bad? I don't know. Let me see. Blue Mango. Hi, Shane. Sorry I joined late. No worries. I'm the only one that can't be late. Remember, this stuff's all available on demand on all the YouTube channels. You just go to live, click on the live streams, and watch it at your own leisure. If you want to check us out in the How to Trade Trading Room, they're all cataloged in our past streams. Let's see. Nat, can you share your perspective on the EuroCAD? Yeah, let's go ahead and look at two markets here. Let's go ahead and look at, I want to look at Bitcoin because it's important that we look at Bitcoin real quick, and then I'll pull up the EuroCAD and we'll call it a day. Let me see. Blue Mango, I joined late. Did you look at gold? Yeah, I looked at gold for quite a while, but we've got a key level and a trade idea out in gold, so go back and review it. You might want to see it. could be coming our way. Okay, Bitcoin. I get a lot of questions about Bitcoin. Here's a daily chart out of Bitcoin. And you can see we got a buy develop back on September 11th, which was last week. Right there. There's your bid from somewhere right around 115.48, and you're up there about around 117.5. So fascinating stuff. You're definitely looking at wanting to get long. For me, I still like the long side of Bitcoin. There's going to be your daily bid. A couple of ways to, sort of manage the trade. You could do it very, very tight like we did on that dollar-yen trade. I don't know that I would do that. I think that if you could get long right there, right around 115.5 was the entry. I mean, you could even put your stop loss down in here somewhere, 116.8, especially if you're doing this on the cash market and you're not using leverage. You're going to be able to sit, and really all you got to do to get paid off on that's your 9,000 or 8,700, which puts your target somewhere right up around 123-ish. Which is very doable, 124, very doable. I think we go up and challenge those highs, those all-time highs, up there right around 124, 124.5. I think we got a real good chance of hitting those, and this is probably the catalyst and the entry point that's going to give us a chance to get in on that run. Fascinating stuff, guys. Rate cuts will be good for crypto, no question about it. Anything that devalues the U.S. dollar will be good for crypto, no question. No question. Okay, we had a question on the Euro CAD, though. Let's go ahead and take a look. I'll give you my own sort of personal look. Here's a good look at our Euro USD trade that we put in. That's an interesting long. I really like that long. I think that we have potential there to capitalize on that inverted hammer. I know I sort of digress here, but this or just a regular hammer, we got a chance there to get some accumulation. I like that one a lot. Okay, let's go ahead and Euro CAD. We had some analysis there. All right. Weekly chart. You could bid this from a fundamental standpoint. Which would you rather favor, the euro or the Canadian dollar? The Canadian dollar, we know that crude oil's in prime time to see a sell-off. We're seeing a little one today, down to about 63.09, so we're off about 1.36%. That's not the move of all moves, but it does suggest that we're in fall seasonality and there is some weakness on the horizon for the Canadian dollar. Remember, as crude oil fares, so does the Canadian dollar. So when crude goes up, the Canadian dollar is going to gain a little bit of strength, which means this Euro CAD would go down. And when crude oil goes down, that typically means the Canadian dollar is going to follow. And in a pair like the Euro CAD, that means it's going to go up. I would have a long side bias toward the Euro CAD right this minute. So what do we have here? Spike low to a spike high, pullback zone right in the kill zone. 162.26 is probably a pretty good bid. That zone right there is probably a pretty good bid. Now, if we want to go down, I've been working with weeklies a lot on this live stream, and I get it, guys. Not everybody likes the weeklies, but you can see, right there, we've already hit it perfectly off of that pullback. We hit it earlier today, so maybe take a look at that bid again. You've also got a 13-day EMA right there at 162.14. That area right down there is where the rubber hits the road for this pair. If you wanted to see them on the daily, you really don't need to know much else than just that order block. Look at that area of fair value that developed right around 38% of our weekly. Plus, you've got an EMA, a 13-day EMA right there at 162.14. It's really tough to argue with that. I would be fixated on 162.25. Bullish bias. Probably want to be on the long side of this market because of the seasonal weakness headed towards crude oil. That's probably going to compromise the dollar CAD, the Canadian dollar just a little bit. We'll see what happens, though. That's for sure. You're welcome. Let me see, Droopy. Shane, that was a great review on the Philly Fed. Thank you for your analysis. You're welcome, Droopy. All right, Haymu, Shane, greetings. Is a Great Britain Pound USD in correction mode now? Well, we'll go ahead and close. I just looked at this one. I want to see how our trade's doing. This one's going against us. We had a sort of a 920 crossover on the 4-hour. So is it in correction mode? I'd say maybe in the short term. But, the trade that we really want, at least I really want, is 134.80. The bid down here, got a real good chance to win from there. So, if you're down there, EMA, 13-week EMA at 134.73. I love it, 134.75. That's beautiful. 134.80, maybe 134.85. That area down there really is fantastic support. So, how do you want to buy it or sell it? Well, the 920 crossover on the 4-hour tells us to sell it. I see room in here where we could pull back down into the guts of this. Personally, I would be on the sidelines waiting for the deeper retracement, probably early next week, and then just go bombs away from 62% to the top side. That's what I would look at. Gordon, good to see you, Gordon. Welcome. So I don't believe it's in correction mode, Haymu. I don't believe that. I think that we're seeing some volatility. Of course, we're seeing a little bit of action, and that's okay. That's a good thing. Action's good. Remember, yeah, I'm not going to say any of those things because they're insensitive right this minute. But if it has a pulse, we can trade it. Let's put it that way. And if we're fishermen and it swims, we can catch it. But it's got to move. It's got to move, that's for sure. Just a quick look at your market news, and then we're going to go ahead and sign off. A lot going on here. We're seeing some stuff here. This one's the one I'm interested in. Trump administration asks. Man, I am out of practice, guys. I take a week off, and I can't even hardly speak anymore. I appreciate you bearing with me. Trump administration asks Supreme Court to allow the firing of Fed Governor Lisa Cook. This one's going to go to the Supreme Court, and my guess is they're going to sign off on her termination. That would be my bet. Could be wrong, but that might be my bet. The rest of it, not a whole lot here. S&P 500 jumps to all-time high a day after the rate cut. Small cap Russell on pace for a record close. Does anybody in here know what the Russell 2000 is? The Russell 2000 is one of those that you can trade Russell 2000 futures, but let's look at the cash CFD. What the Russell 2000 is it's sort of a small cap index. So for the people that like action and they like volatility, a lot of them trade the Russell. I don't have much experience trading the Russell 2000 at all. A lot of folks do, though, and if you do and you're making money, that's great. But you can see that we're just sort of on the breakout mode. What would you say would be the big line in the sand for the Russell? 2,500. Something like that. So if we were looking to maybe to make a trade up here against the Russell 2000, you probably would dig in at 2,500. Let's go to the US 500. Same thing. And this is sort of our analytics. This is what we had going into the last several weeks. The compression right around 6,500 is undeniable. Test to 6,500 down. Test down. Two-way trade break. Get long. Now we're just trying to get long here on the US 500. What would we love to do? We would love to do, just wait and get the perfect trade. What's the perfect trade? Pullback. You'd love a pullback from right around 6,500. Ideally, perfect world, what would you love to see? Trade a little bit higher, and then get that pullback maybe in October sometime, right around 62% level, right around 6,500. That's an absolute crazy trade. That would be fantastic. You couldn't pass on something like that. It's too good. We're not there yet, though. So, hey, Bobby Bob, good to see you. There's a lot going on, guys. As far as what we think is going to happen and what is happening, the dollar's on the ropes. There's no question about it. Is the dollar going to get any stronger? I can't see it. A lot of us believed that when they started cutting interest rates, that's when we would see the big correction in the market. I see some underpinnings for a major sell-off in equities. And I said that earlier this year, and we saw the tariffs, and then we had the big tariff craze. So I felt pretty good about that call. This one's going to be different. The markets are used to tariffs. The fundamentals facing our economy are not great. We're seeing employment slow way down. We're starting to see the civil unrest that I've talked about over the past several years in the United States as being a potential market driver. We talked about elections and all the different uncertainties, and nothing has seemed to derail the market since COVID-19. That much money went into the markets after COVID because that much money was printed during COVID. When we start thinking about what could derail the stock market rally, it would have to be something very serious. And rate cuts from a guy like Powell that, it looked like his dog died. He looked terrible. And I think they see the underpinnings of a potentially stagflation type of a situation. If you remember stagflation, where the unemployment starts creeping up and prices stay high, and it's just basically the kiss of death for developed economies, really any economy. We're starting to see that, and it's becoming more and more realistic. Home prices, housing prices. One of the great things that came out of the trip to Europe was I got a chance to sit and talk with folks that are from all the different regions all over the world, and we all had the same basic complaints about real estate and housing and how high prices are. It wasn't just here in the United States. It wasn't just in Dillon, Montana. It was all over the place. It was in Eastern Europe. It was in Western Europe. It's all over the place. So that was very instructive to me. I kept waiting for somebody to say, our housing's relatively unaffordable. Didn't hear it once. That's big. So I think like we all feel that something's brewing here. The debt bubble is undeniable. Consumer debt's as high as it's ever been. Government debt's as high as it's ever been. How do you get out of this mess? The idea is to cut interest rates and spike growth, make sure everybody has a job and grow the economy that way. But what about prices? So what if you raise the limit on my gold card to $75,000, but you charge me $100 every time I go buy a bottled water or something? None of it matters. So I think we're in a real tipping point for the global economy, not just the United States, but the global economy. I think things are really poised to change, either for the good or the bad. I don't know which. I'm saying I don't know a lot right now. I usually have a pretty good beat on things. I don't know. But until we see a pullback, until we see a major sell-off in equities, we've got to be ready to buy pullbacks and just play this thing to the top side. That's the way it is. I mean, S&P 500 all-time highs, you buy pullbacks. Dow 30, same thing, buying pullbacks. Russell 2000 buying pullbacks. Nasdaq buying pullbacks. Nasdaq's up over more than 1% today. I mean, it's really on explosive topside growth. You're trading right up there, right on the cusp. We talk about key numbers every day. This will be the last market, I promise. I've gone on long enough. But I talk about key numbers all the time. That's basically it. And a lot of folks say, Shane, come on. No, really. I'm a big believer in them. A lot of folks ignore key numbers. It's not a good idea. That's the biggest key number on the board right now, 25,000. Psychologically, 25,000, everybody understands it. Everybody that trades the Nasdaq is going to have an opinion of the Nasdaq from 25,000. They're either going to say, this is going to top out for a year. We're going to exit our positions and look for something else. Other folks are going to say 25, we're going to be at 50. That's going to spur a lot of debate, and we're going to trade it. 24,477 right now. What do you think's a good sell? 24,975 is a great sell. 24,925. 24,950. Those are great. Those are high impact scalps. It's really tough to argue with the rationale behind any of those. The biggest thing you have to remember is if you're going to short something like the Nasdaq, don't get caught. You've got to be sure that you get out and just get out and look to come back. That's all trading is trading on your terms. Not letting one trade clean you out. But 25,000 the Nasdaq, it doesn't get any bigger than that. Okay, everybody, let's see. I got to get way behind on live chat here. A couple more. Let me see. Mariano, did you purchase the ZAI X7 token during the pre-sale? No, I sure didn't, Mariano. I don't even really know what that is. I wasn't invited to the pre-sale either. Just like I'm not invited to those Fed pressers. They won't let me ask Jerome Powell any questions. They should. I got a couple questions for him. Where'd you get that suit, Jay? It's always a pleasure. All right, Lewis, the Russell was lagging today, so caught a good move this afternoon. Great to hear. Lewis, you're trading the Russell 2000. Fantastic. Well, it's all right there, guys. The equities markets are heading up. That's all on interest rate expectations being really dovish, but it's not just this rate cut. Everybody's going to say, oh, we cut rates and then the market goes up. It's not just this one. We're looking for Jerome Powell to be gone soon. I think that FOMC member is going to get fired if that goes in front of the Supreme Court. And you're going to see all of these folks that are running the Fed all of a sudden are going to be connected one way or another to the Trump administration. And like it or not, what the Trump administration wants to do is they want to get interest rates very, very low. And that will spur economic growth and that will spur your markets, but will also spur inflation. So I don't know that that's going to work. It's a plan. I don't know if it's a good plan. Feels like the debt bubble's coming home to roost, guys. And once that thing pops, it'll be 2008 all over again. First thing we'll be looking for is banks to fail. And as soon as we see that, then I'll be doing special live streams to cover everything. All right, guys, I'm going to go ahead and sign off here for today. Thanks for joining me. I'm still getting back into the swing of things, so I apologize. I'm not quite as quick, and things aren't moving as fluent as they should, but they will. If you have any questions at all, head on over to howtotrade.com. Be sure that reach out. Send me a private message. Also, if you want to trade, Be sure to check out Switch Markets, switchmarkets.com. I'm going to go over a few of the awards won. There were some awards Switch won the other day that was interesting. Those actually just came across my desk this morning. We will be going over those tomorrow, and I'm going to go ahead and promo those because it really, when it comes to a broker, it's all about being reputable, understanding that, yes, you're going to get paid quickly, and they're going to get you the best possible fills and market access as possible. Switch got some awards in that area, so that's interesting. We'll go ahead and go over those tomorrow, and I'll be sure to sort of just tell you what they're all about. That's for sure. All right, guys, have a fantastic trading day. Finish strong. Don't get chopped up. This one looks to me like we're going to trend higher towards the end, but be very careful with your intraday trading. Don't get chopped up as we go into power hour. Remember, the game really changes here in about another, hour and a half. Then we get the big flood of liquidity right before the daily close. Be careful. If you made a bunch of money, maybe take it home. We'll be back tomorrow with another live stream, Finding Friday Opportunities. Bring your questions. Fridays are a great time for Q&A. If you have any questions that you want to ask me, psychology or anything, the checklist question today was a good one. I'm more than happy to take time out and answer those. If you have any markets you'd like me to look at, that's fantastic. And the trade idea is now up for all the How to Trade members over in the trading room. And if you follow me in the How to Trade trading room, you get those sent directly to your email inbox. That's a wrap. Have a fantastic day. Trade the action well, and we'll talk soon. See ya.